And as Mashudi was just alluding to there, when we look at how the tea sector has been performing, in particular Sisini tea and Limuru tea as well, up north of 7% in today's session. It seems that they're having a very good session today. Do you think that this kind of performance can actually be attributed to some of the positivity with regards to the earnings forecast into 2012?
Yes, the tea sector did quite well last year, and most members of the investment fraternity are actually getting into these stocks to benefit from 2011's profit gains. The outlook for 2012 might not be that good compared to 2011, considering year-to-date tea prices are down 13%. And coffee prices are down close to 10%, which is what Sasini and Limuru tea actually are major in. So if prices continue going down and production does not go up, then the profits this year might come down lower than 2011. But for anyone who's getting in for the dividends for 2011 and just for the hype that comes with the announcement of the results, which we all know will be good, then they are the good stocks to get into.
Oh, do you think it's still time to get into these stocks despite the fact that we could actually face those headwinds that you mentioned?
It depends on your horizon for investing. If you're going in there just for the dividend, then yes, it's good time to come in, because they're still way below their 52-week highs if you look at both counters. And they did rally sometime last year, especially for Limuru tea, but they did soften as we started the year. So there will be good times to enter into if you're going in for dividends. But if you're going in for the long haul, the timing might not be quite right.
Okay, so let's touch on the banking stocks, and in particular, let's look at KCB. That stock up around 14% in the first 5 weeks of this year. A lot of speculative demand that we see coming through. The company posting fantastic results that we saw up till September. And it seems that on the other end, we also hear reports of non-performing loans rising by 3 billion shillings, lending costs rising significantly. Of course, the interest rate environment is very different there. So two very different stories that we're seeing coming through. Do you think that this year is the year that we'll see banks recovering extensively?
Not quite. Like you said, there are two different stories here. We have stories of banks that benefited during the arbitrage between high rates and low rates in terms of deposits and in lending out. But you find as we got closer to the end of the year, that gap was narrowing, considering cost of funds also went up high. So the hype that we saw in early January this year is basically the normal hype that you see people getting into banking stocks because they know they've done well. So they're the first ones to announce results, dividends, and all the hype behind. But if you look at the report that non-performing loans went up in October, and that gives you another 2-3 months to the end of the year, where we're expecting that figure can actually go up higher. And the problem with the non-performing loans, once a non-performing loan has been tagged non-performing loan for more than 3 months, then they have to provide for 20% of it, which will affect the bottom lines of the banks. So actually, in terms of dividends, most banks are actually seeing them either maintaining dividends for 2010 or actually cutting dividends, like what Cooperative Bank issued a warning already in December.
Well, I mean, the truth is that a lot of the banks are expected to post double-digit growth numbers. It also seems that some analysts have said that when we see the impact of non-performing loans or even defaults coming through, they're only going to really be reflected this year. So the worst perhaps isn't over as yet.
Yes, definitely. So again, like in the tea sector, if you are actually investing to benefit from 2011 results, then it will be a good bet. But the question is, will the stock recover after it goes ex-dividend?
Let's touch on Kenya Airways, a company that has also been under the spotlight with regards to its right issue. And then also, there seems to be a bit of concern when it comes to profits. Middle Eastern airlines are starting to expand further onto the African continent. Is this a big risk for the airline?
The risk is towards 50% or 54% of the revenue comes from the African routes. And Kenya Airways had benefited from no interconnections between East Africa, West Africa, South Africa, North Africa. Now, with these other airlines who are coming and who are giving that connectivity, plus connectivity to the East, to your Dubais, to your United Arab Emirates, and cheaper connections basically to Europe, then Kenya Airways starts facing that fact, that risk on that side on their revenues. With the strengthening of the shilling, again, it will also boost their revenues in terms of exchange rate gains. But they do actually hold a serious risk on their regional routes if they actually don't try and, because the battle will go to pricing at the end of the day. And that's where it will actually hit them hard.
So, I mean, foreigners are starting to include themselves in market trade. We're starting to see volumes ticking up slightly, usually a very slow start to the year. Again, there is a lot of reticence because we were waiting to hear on the growth numbers that are expected to come through from Kenya. It seems that things are looking slightly better. Inflation is also coming down. This is going to have an impact on overall earnings and the overall performance of the market. What kind of equity results and returns are you expecting for 2012?
On the economy front, let me just comment on that before I comment on the earnings. Yes, inflation is edging down, but if you look at the consumer price index, it's still going up. So basically what is happening is just the rate of increase in inflation is what has reduced, but inflation is actually still a risk. With commodity prices coming down for tea and for coffee, then we're expecting export pressure on the balance of payments accounts. Basically, we're expecting reduced revenue inflow from the agricultural side, from the exports. And yet, copper prices, oil prices are all up. Copper is up 10% year to date. Oil is up close to 5% year to date. So that means our import, the gap between the export and the imports is going to increase, giving pressure to the shilling. So to say 2012 economically, we are still not out of the woods at all. And that pessimism and those indicators that seem to have that impact on the economy will keep earnings rather suppressed for the rest of 2020.
So, I mean, which sector do you think is going to perform the worst into this year? We're looking at the cost of capital being very expensive. We're looking at rates at 18%. We know the construction sector has actually had quite a big knock. We know that banking perhaps is slightly more in vogue. What kind of adjustments are you expecting on a sector basis?
It's an interesting question. I normally like them the other way around, which sector will perform the best in the market. But for the worst sector that will perform the worst, most probably you'll get the banking sector being amongst those because credit has become tight and private credit growth has slowed down and is reducing. And if they can't lend out money, they really cannot make money. So naturally, you'll find after this result season, again like last year, people will shun the banking stocks here and there. So we expect that on the banking stocks. The manufacturing sector, especially because of cane, the major input is cane and food processing, will also have an impact on the growth of our agricultural sector. So those two sectors, I mean the manufacturing sector. So the manufacturing sector and the banking sector might be in the red this year.